as you highlighted, there is some components in the ISM PMI data this week that at least covers the, let's say, the early to mid-March period when we already started to shut down the economy slowly but surely. And then the factory orders, durable goods come out too. That will probably show as well that there's, of course, impact. I think what markets will try to do here, Dom, is that as we now have announced all the stimulus and we're also enacting this Defense Production Act, how will those numbers behave from the next series that come out? Because the market will calibrate, like we're going to get a collapse in data, but there's also going to be offsetting factors such as stimulus. So that will be, I think, this week sort of the calibration and why markets will stay very volatile.
All right, so then take us through the expectations. I mean, we're not going to go data point by data point, but what is the general feel from the macro big picture side of things then? How worse could this get? How slow could the economy get? How many jobs could we lose at the peak? And has the market really started to handicap or factor these things in as many talk about the possible bottoming process that may be in effect right now?
Right, and that bottoming process, of course, is really critical to how the data now comes out, right? So the market has got a lot of fiscal and monetary stimulus and projects out that this may be hitting the economy positively in the future. But if you look at data point by data point, we can take a cue from what happened overseas. The PMI data both in Europe, Japan, as well as in Asia showed a significant collapse. And that was all related to already slowing down, if not shutting down, parts of the economy. So we can expect that here too. ISM, PMI will see at least a 20-30% drop from the previous numbers that came out. And then the question is that the stimulus that we've put in the system, which is substantial, by the way, up to 30%, will then start to cover the following period. I think this is what markets will grapple with. It's difficult to precisely gauge on how much that will be offsetting. I do think we can expect significant declines in our production and ISM data.
All right, so that's the bad news. We could expect to see much worse data coming out. Are there any parts of the market, asset class-wise, industry or sector-wise, geography-wise, that give you some semblance of positivity in all of this mess right now?
That's a great question, Dom. I think that if you look at the market broadly, you say no, nothing works, right? But I do think that there is obviously, really defensive sectors in terms of healthcare, biotech, et cetera, that is obviously up because it's all predicting that they will come forward with either measures to stem the virus or have a lot of demand for the products to stem the virus. On the other hand, if you, for example, look at the bond market, the stimulus that will come in there now, particularly in the credit side, will be relevant for markets. The corporate credit programs that come up from the Fed, that will, I think, be really important for broader stability in markets. And so I think that's where the positivity may come through over the next few weeks.